future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Pierre Lindh.
This podcast is brought to you by Pragmatic Solutions, the leading iGaming PAM platform with a modular approach, including many benefits like a fast, secure, and scalable API-based platform, integrated with all major third-party products and services. Make sure you head over to Pragmatic Solutions and join our smart thinking.
All right. We are back here on the podcast with the quarterly report Evolution special extravaganza today with Magnus Andersson. Always great to have you back on the podcast. How are you doing today?
I'm fine, thank you. How are you?
I'm doing brilliant. It's the first time we are trialing out our new studio here, which we are really excited for. So we've been looking to build this studio for the last 2 years. It's been a bit of a dream of ours. So finally, you are the first guest here today, Magnus, of the new podcast. So
I feel very special today.
You should feel very honored. Yeah. Let's jump straight into it. Basically, Evolution released their quarterly report, much anticipated quarterly report here for Q3 2022. And I'll just leave the word over to you, Magnus. Can you, from your point of view, summarize the quarterly report from your perspective?
What struck out the most to me, of course, was the fantastic growth. They're back in very, very good growth for live, for the live segment that they have. For the slots part, the RNG part was lower, about 2% year on year, if you exclude their purchase of No Limit City. And the margin was a little bit softer. They say themselves that they feel a bit of pressure, their inflationary pressure, like everybody else. But they are not really... The electricity part, which had been a part of the discussion on the worries about Evolution, is, they said, only about 1% of their total costs. So, I mean, that's not all that relevant then. I mean, it's a very, very small part. But I would say it's a very, very strong and stable report. And I think that all the worries that were regarding growth in Asia and also growth overall and competitors has been put to rest. I mean, I really hope the guys celebrate a little bit today since they work so hard all the time, because they really should. This is a very, very solid report with, apart from a little bit lower margin. I mean, everything here is, I mean, it has to be put in a context here. We're talking about 69% EBITDA margin,
yes,
which
exactly.
is within their forecast of 69 to 71%. But people complain about a few tenths of a percent on the margin there, and I mean that's a bit ridiculous. It doesn't matter whatsoever if you have 70% or 69% margin. It matters if you have 70% or 50% or something like that. I mean, it's basically the same thing as if you had 69% instead of 70% growth year over year. I mean, right. It doesn't really matter. Evolution is about growth, really. I mean, as long as they grow, they will make tons and tons of money. No matter if the margin is 70 or 69%, of course. And also, it's worth noting at absolutely every quarterly report, both the CFO and the CEO say that they always prioritize growth over margin when there is a trade-off. And this is, of course, exactly what they should be doing. There are lots of companies that try to get as high a margin as possible and try to make all the analysts happy. But a company like Evolution, they really have to invest a lot and invest all the time. Invest, of course, most of all in new games, but also invest in growth all around the world with new studios and new capacity in old studios and so on. And if they wanted, I'm sure they could raise the margin by a few percentage points if they just stopped investing all of a sudden. Perhaps they could do that for half a year and make all the analysts very, very happy because they would have 75% margin all of a sudden. But that would be horrible, of course. A little bit later on when the competitors started to close in on them, and all their studios would be choke full of people and so on. So I like this very, very much, that it doesn't matter if costs go up or if we have inflation or anything like that, they still continue to invest. And this is so different as compared to American companies that I worked for once upon a time. First, I worked at Hewlett Packard and then at General Electric. And when we were in the last few weeks of every quarter, all of a sudden there was the CEO sent out no travel whatsoever now, and nothing of that. Just stop spending, because he, of course, was worrying about the profit for the quarter and the margins and so on. So we all had to cancel our meetings. And sorry, I'm going to. This is very important. I'm going to visit a factory here. No, can't do that. No. You can't take delivery of those things that you ordered, because then we will have an invoice. You can't do that. Perhaps in a few weeks. That is the way that some companies are run. But Evolution says basically, screw that. We have to invest, and we will always invest in growth. And I like that very, very much. If they stop doing that, if I could, I don't think that will happen, but if they stopped investing in growth and instead started to pinch the pennies and say, no, well, perhaps we'll release that next year instead or something like that, that would be very, very bad. And I can't even imagine them doing that, really. But I think we should be happy that as shareholders that they continue to invest all the time like this, because they also have very good cost controls for everything unnecessary, obviously. Otherwise, the costs would have run much, much higher now with the inflation coming.
Right. So, overall, what you're saying, Magnus, is a bulletproof report, so to say. They show growth in all markets in a very unstable world with ongoing wars, with rampant inflation, instability in the markets. It seems that evolution is the one constant in this very chaotic macro environment, and that's obviously what investors should be looking for at this stage. But the investors aren't actually agreeing with you. If we look at the share price and the reaction to the reports on the markets today, the market's actually down or somewhat break even today. What do you like? Why do you think this is? Why do you think the markets did not react positive to the report today? What could be the reasons for this, despite the fact that they actually beat the analyst expectations?
Yeah, well, one reason could be, of course, that they warn all the time for the uncertainty on the market there, but that is basically what they always do in these conference calls. They say, "Oh, this is looking good, but still, we don't know. We'll have to see," and so on. Costs are going up, and so on, and that kind of uncertainty can always punish Evolution shares. Or the Evolution share. But also, I wouldn't put too much into this, because I've seen so many nice reports by Evolution, fantastic reports even, where people have, or the market has sold off. I wouldn't think too much about that, because the stock now, I don't know what metric you, any way you look at it. We have for the next year, price equity ratio of perhaps 20 for a company that grows by the profit by 42% on a rolling 12 month now at very, very high margin. I mean, if you're going to value one of the best performing companies in the world at P20 for next year, I mean, yeah, of course you can do that, but it doesn't really make much sense, even if the interest rates are going up. I think, and also interesting when we think about the interest rates, many analysts when looking at companies now are worried about the interest rates because most company, of course, has borrowed lots and lots of money, and that debt really costs a lot more, of course, when you double the interest rates. But interestingly for Evolution, since they don't have any debt, so I mean, it's the same situation. If you have paid off your mortgage, it's the same situation. I mean, if you don't have any mortgage on your house or your apartment, it doesn't matter if the interest rates are going up, basically, and it's the same thing for Evolution. Then, of course, there is of course this connection between interest rates and inflation and everything. Then inflation is very bad, of course, but I wouldn't worry like that for the stock price reaction for 1 day or 2 days or something like that. I think in the long run, I think the Evolution will be much higher valued than they are today, and that has much more to do with the general market and there, of course, the interest rates.
So I mean, we can agree, Magnus, I think as well, that from a helicopter view, the company seems bulletproof. Again, they are just performing extremely well. They have the finances in order. Seemingly, they have full grip of the market. Very difficult to compete with Evolution. It seems to be. They seems to be in just an incredibly strong position. But if we zoom in and we look at, for example, the RNG segment of the business, which organically doesn't seem to be able to produce any growth in compared to their competitors, say Pragmatic Play, which is not a publicly traded company, but through the grapevine, we can with pretty much certainty say that Pragmatic Play is growing exponentially on the RNG side. Relax Gaming, which does publicize their numbers, they are growing their RNG revenues. Is this a disappointment, do you think, that the kind of the second leg of Evolution is not able to produce organic growth?
Yes, absolutely it is, but there's nothing new in it. I mean, nobody should be surprised by seeing it. This is unfortunate, but still they have some growth, a few percentage points, but obviously this is a completely different thing as compared to the other 82% of their business, which is live casino, of course. But I haven't been too worried about this because the reason in many ways that they bought, first of all, NetEnt and then the other companies and got the foothold in the slots business was, of course, that they wanted to go to the customer and say that, look here, we have everything, which means that basically all companies are their customers, all the operators are their customers. And that was the strategy. I think that made sense that they did this. But of course, when a company grows like they have and have executed the way they have in their main business or their only business used to be, I mean, until 2 years ago, it was their own business. Then, of course, the market can expect and should expect that there will be healthy growth also in the slots business. But we'll see. At the same time, they say that they are on their way to achieve double digits. I mean, like 10% growth year over year in slots. But we have to put things also a bit into perspective here because pretty soon, I think, I mean, if it's moving on like it does now with both live and slots, slots will be soon like 15% of the company. I mean, 15, that's very, very little. So if they grow by 10% on these 15%, that's 1.5% on the total, and 1.5% on the total when you grow like 30, 35, 40% a year. That's very, very little. That's not what we should focus on. I mean, Evolution's business is live casino. That's, I mean, really, that's where the big bucks are coming in, and that's the case for owning Evolution. It's or not owning if they don't succeed the way they have in live casino. I think.
So Magnus, you pointed out here the PE ratio of Evolution, the price to earnings ratio being much lower than what it perhaps should be at the moment. What do you think a reasonable PE ratio for Evolution is today? Considering that, say, a year and a half ago when Evolution peaked with the share price, the PE ratio was something like 75 or 80 or something like that. But what do you think? What do you think it should be?
We have to think about what kind of PE we're talking here. I think when you say 75 and 80, it was PE. On the current or the last 12 months or something like that. If we talk about the next, I think it's most relevant to have an outlook, a reasonable outlook for the next 12 months or the next year. And if it's 20, I think it could reasonably be 30 instead, because it's, I mean, even a PE of 30 on next year, if you grow your profit now at 42%, and I mean, that will likely go down, but let's say it goes down to 30-35% per year, then I mean, a PE of 30 as the interest rates are today, I think is reasonable. But there were lots of things happening last year because of all this interest in America and all those gambling companies going through the roof, even though they didn't make any money or lost tons of money. And Evolution, of course, was got into. I mean, people all over the world found out about Evolution because, I mean, 2 years ago, 3 years ago, only Swedish people knew about this. Basically,
was it overpriced at that time? Would you say?
You could argue that it was overpriced. I mean, it wasn't a healthy trajectory when the company grew the last 100% in just a few months. I mean, that's. We should all have been a little bit cooler there. I think this is not sustainable because it likely isn't when it grows like this. But I mean, I don't think that's. We can always discuss price and so on, but the basic of investing is the way that the companies deliver. I mean, as long as a company like Evolution or any other company delivers healthy growth, good margins, good profits, keep their competitors on a nice distance and so on. As long as they do that, we should just sit tight and wait. I mean, the price will take care of itself sooner or later. And if the general market goes up, if the interest rates are starting to come down, the Evolution stock will go up again, I'm sure. But we can't really do anything about that. We can just sit along and see what happens, I think.
Absolutely. We are in the gambling industry here after all, so a little bit swings back and forth is second nature to us. Yes, that's how it is. That's how it is. A part of the excitement. Final question for you, Magnus, here today. If you were to create a case against Evolution, which maybe doesn't come natural to you to do, but what would that case sound like?
Yeah, but I mean, the pragmatic story there is very impressive, and of course we don't know all about the numbers because they are privately held and so on. They have obviously very good financing. I've heard they have very, very good situation there. I mean, if they were to start producing games anywhere near or better than Evolution, we haven't seen that whatsoever. They also just many times make very similar variants of Evolution games. But I mean, if a competitor like that would start growing much faster than Evolution within the live market, that would be worrying for Evolution. But I can't really see that, because the whole casino market is growing, and online is taking share from the physical casinos, and within online we have a very nice movement from the RNG business to the live business. So I mean, there is room for more companies than Evolution, and also more companies who are successful than Evolution, because there will be room, there will be growth for everybody who can make the players happy, basically, and have quality games. That is key. But I don't worry too much about that today. But that is what we should look at, because it's highly unlikely that online casino or live casino would just suddenly stop growing. I think that's very, very unlikely. But as with any other company, you have to have you have to look almost as much at the competitors as you do at the company that you own.
Brilliant, Magnus. Thank you so much for sharing your valuable time with me today. I know that you have other things to tend to here, so thank you for today, Magnus, and I will see you soon again.
Always a pleasure to be there.
Always a pleasure. Thank you.
Yes. Bye.